Hey everybody, Brian Shannon here from alphatrends.net. Today's Thursday, the 18th of April, 2019. Last day of trading this week, as it is a holiday shortened week, so enjoy your extra day off. The markets were mainly higher this week, but we saw some weakness in biotech and healthcare. Biotechs were down close to 6%, bringing them or keeping them negative year to date. So S&P though, NASDAQ, still holding up really well here. In fact, the semiconductors are right up in an all-time high. So let's take a look at the charts. This is the month-to-date volume-weighted average price I have here, and we can see that this has been an important level where buyers have been showing up. So next week, if we see buyers, kind of go on strike a little bit, I think a pullback down towards this level, 288-ish, would likely be the most important level to keep an eye on. And of course, just above that, we have this prior band of resistance. So on the daily time frame, we're still in a primary uptrend, approaching the all-time highs. There's just no sense in fighting this type of momentum. Now, we did see we were slightly lower and a little bit choppy this week, but that doesn't mean that we have to go down. It just means you have to be aware that maybe the market's being a little bit choosier about what it wants to reward here. The NASDAQ, however, did finish close to the highs for the week. You can see that it was the closing high this week, and of course on the weekly time frame we are approaching the all-time highs here. In fact, we did get up through them yesterday, and today we're closing right at that level. So we're not seeing any pullback yet. At least we can keep an eye on this volume-weighted average price for the beginning of the month, and we could also, maybe put a trend line that looks like this to capture the essence of trend. So the levels that we want to be aware of would kind of fall together in that about 186 area, this prior peak, and if we were to break below that and stay below it, and the 5-day moving average were to start to curl lower, let's say we did something like this, then I think a test of 185 would be likely. Right now, there's nothing here indicating that this is a failed breakout, but we've come a long way here in this market, and you have to always say, what's the potential next? What could hurt me? And then you look at it and say, how do you manage risk to make sure that if you are buying up here, you don't get hurt badly, or more importantly, to protect your gains that hopefully you do still have. The Russell 2000 came down to an important level of support this week and did find, in fact, support there. This area right here at about 155 has been tested quite a bit since the beginning of this month, and here we are once again where it held. We are, however, below the volume-weighted average price for the month and below a declining 5-day moving average. That tells me that on the intermediate term time frame, it is guilty till proven innocent. It gets neutral back, I think, above 156.5, and we'd probably have to break new highs for it to be positive once again. Going over to the daily time frame, however, I don't think you want to get bearish because we still have a rising 20 and 50-day moving average where we are here. And this is what we call the trends being misaligned, meaning that the daily time frame still gives us reason to be bullish here, but the intermediate term time frame says maybe we have to be a little bit more cautious. So when we have mixed messages like that, my preference is to just let the market tell us what it wants to do and be a little bit more careful. Now we can also take a look at the volume weighted average price from this low that we saw back in March, and you can see that's where we're holding. So if next week we break below and hold below 155, I think it's pretty likely that we could continue down even towards the year-to-date volume-weighted average price. So we're on guard here. I don't think you want to short yet. I don't see any reason to buy. The semiconductors are, again, beyond the all-time high here. So we've got this market, at a new, today, again, it was up 17 cents. So it is an all-time closing high for the semiconductors, and you just can't fight that type of momentum. Here's our month-to-date volume-weighted average price. We're well above that. We're well above the rising 5-day moving average. The name of the game in here is to protect your profits, not to look for new purchases when the market is this extended. And we've had, obviously, a hell of a run from 82-ish up to 117. So just be aware of where your stops are and manage your risk. Now the biotechs are kind of similar to the Russell 2000, or they were similar to them coming into this week. By that I mean at the beginning of this week we saw that these semiconductors were holding right above the year-to-date volume-weighted average price, and they in fact had closed on the 50-day moving average. On the intermediate-term time frame, we were below the declining 5-day moving average, and that told me to avoid trying to get long. The daily time frame, however, I personally was not bearish this group. I thought they were going to hold, as they were holding above the volume-weighted average price from the December lows, but we obviously crushed right through that. Now, you can look at it and say, well, you should have been short, and that's easy to say in hindsight, but you can be short against the primary trend based on an intermediate term time frame if you manage your risk tightly. However, going back to the Russell 2000, we have the possibility that those biotechs could be saying something similar to, if we saw a breakdown like this, that it could pull back down. So again, I'm not bearish the Russell and the biotechs. I think it's too late to sell short in here. So to me, they're just simply in a void. Now the financials, I had outlined this inverted head and shoulders pattern that has a high price target if it's obtained. We spoke about that last week. It broke the neckline, and so far this prior resistance in this area has held as support. So we want to look at this market as innocent till proven guilty. On the weekly time frame, we can see that we are breaking beyond this little band of what had been resistance. So now it looks like the trend line off of these peaks is something that we want to be aware of. So let's just draw that in. And that could come into play, up near about 28. So just be aware of that next week. But with this market above the rising 5-day moving average, the buyers remain in control. Here's our month-to-date volume-weighted average price. Here's our volume-weighted average price from this gap. That ties in right with the 5-day moving average. So this is a short-term level of significance, I think, right in at about 27.25. If you have tight stops, maybe slightly below, this low would be a place for that. And let's talk about a couple IPOs. One, Lyft came public a couple weeks ago, and everybody's been talking about that one. The volume-weighted average price has been lower the entire time, meaning that money continues to flow out of this market. Now, there's the month-to-date volume-weighted average price. If I draw a VWAP off of this level, you can see that if we get a bounce next week, be aware of the volume-weighted average price from this peak. We are right now trying to hold above the volume-weighted average price from the low so far, but it's not convincing at all that the buyers are going to be in control or be able to maintain any type of control, that is. Let's take a look also at the two IPOs from today. Pinterest, PINS. Here's the volume-weighted average price off of this, and you can see, as the buyers regain control after the initial pullback, there was a nice trade. The volume-weighted average price acted as support. We had a little bit of a dip, a little trap below there, but it's still closing above the volume-weighted average price. Look at Zoom video. This one really just a choppy IPO so far. It opened well above the offering price. However, at the end of the day, the average participant who was involved in this today is losing about $1 per share. Now, things can change rapidly in these markets, but early on in an IPO, this gives us the best representation of who has control, who's losing or gaining control, and it looks like the sellers are gaining the upper hand in Zoom, but they right now still have the upper hand in Pinterest. Enjoy your long weekend, and I'll talk to you next week. Thanks.